Morning everyone, it's me back again. It's time for panel 2. I think it was a fantastic panel 1 talking about the future and how technology is changing all the banking. My focus will be on corporate and transaction bank. How does that change? Because everybody believes no, all of these digital technology is only for retail. And technology at the corporate is not going to change, it's still going to be RM driven. So I have a very established set of speakers. I'd like to invite Paul Becker, Group Head of Operations of Bank B.S.C. So Paul has been a veteran in the industry in Bahrain also for a couple of decades. He heads the group operations at the bank B.S.C. and across markets. He has innovated on trade, payments, and recently taken bank through a very successful core banking transformation as well. My next speaker is Maytham Abbas. Maytham has been head of business development for Khaleeji Bank. Maytham, warm welcome. Maytham brings a very interesting perspective on business development, value proposition design, and heading bank's product development across areas. Moving next, my next speaker is Shahzad Iqbal. Shahzad is heading the PMO function and corporate development, and he is setting up a new wholesale bank within Bahrain called MENA Industrial Bank. Shahzad has been veteran in industry. I was talking to him with 3 decades in Bahrain and across multiple banks, and at this time setting up a new bank in a wholesale area with the next level of digitization. I'm sure it's a very interesting journey listening from. My next speaker is Abdelhamid, who is a CTO at Bahrain Development Bank. Saeed has 16 years at Parekh and has joined the bank in transformation role. Last but not the least, my next speaker is Ahmed. Ahmed is a senior manager in product management at International Turnkey Systems, which has been transforming Islamic technology in the region. Very warm welcome, guys. And after such an interesting panel led by Ram, where there's so much innovation, digital, stable coins, all the new concepts, retail is looking at it. It's time for us to stay on the corporate side, and especially on the digital corporate side, how the world is changing and what's the expectation changing. So Paul, I'll start with you. It all starts with customer behavior and expectation changing. Like in retail, we have new segments. So if you look at the corporate customers, and over the last decade, how have you seen them changing their expectation in terms of efficiency, innovation, resiliency? What is it corporate customers are looking differently now?
Well, thank you for inviting me back again. I think this is the 3rd time I've been in this chair, so thank you. And it's great seeing you all. What has changed? Well, I'm going to start actually what hasn't changed. Okay? So, what hasn't changed, but has completely ramped up to another level, is customers want speed and turnaround time. We've talked about data. The treasury of a company wants to know their cash flows. What has changed is that they want to know it more accurately and more quickly. And often a client will want to know where their payment is, where are their documents. So trackers and things like that are now becoming a lot more prevalent. And then that links very much into the work that our global transaction banking team have been doing, is then integrating the information that the bank has got, the ERP systems of our clients, more customized dashboards, and other tools. So it's the same requirement, but on a completely different level. Now, I'm in operations, so perhaps looking from an operations standpoint, and it was really interesting in the previous set of speakers, they touched on invisible banking. What I love is invisible operations. And I think sometimes the size of our operations is a reflection on how effective our IT is. Now that is obviously impacted by the types of products that you support and also your client behaviours. But one thing I wasn't going to speak about today, but it just made me think about it, is that client onboarding. I remember the days where we had great big teams in operations that do the client onboarding. Most of the client onboarding now happens at the front end, either by the client themselves or by the middle offices. And the back office, there's a couple of touches for exceptions, but a lot more seamless. We saw that in retail, but now that's here in corporate. So that's completely changed over my sort of the last 5 years, really. And you know, we talked about things like payments, and I'm passionate about payments. I started with payments, and the biggest challenge that we've had over the years has been this sanction screening. Things have been S2P for a long time, but it's only really now with the advent of AI that we're finding better ways to deal with the false positives. I'm looking at a number of solutions at the moment where we can take away all of that friction and using technology, and therefore, you know, in operations, this is transforming operations. I'm seeing examples again where our global transaction banking have been working on receivables financing, and we had capacity issues in the number of invoices that we could cope with, but we've transformed that, and now we can deal with thousands and thousands of invoices on a daily basis and finance those. I'm going to perhaps end my piece on another passion of mine, which is trade finance. And again, I'm seeing a huge transformation in the way that we do our trade finance. And rather than talking about trade finance, I want to talk about documentary trade. Documentary trade is documents. We have now for a few years been working with a FinTech, using a combination of OCR, AI, and a few more traditional IT tools to integrate, basically to take the documents, read the documents, populate our systems with the documents, check the documents, and help with all of the compliance checks, whether that be sanctions, dual use goods, vessel checks, price checks, all of that, making the experience a lot more seamless for the client, but also we're having to make sure that's done in a very safe way and a robust way. Still using a human to double check everything, But then, that is helping with resilience, with compliance, and really helping us support our customers. And I think just one tiny bit to finish on. I know that was going to be the last thing, but I think, on all of this, with all of this technology, again in operations, I'm spending more and more time looking at cyber. I think my colleague from Iqbal talked about business continuity and disaster recovery, and how we use cloud to make things a lot more resilient. So operations is changing. And I think in another few years' time, you'll see much smaller operations, but maybe larger IT departments.
So again, just to understand this a little better, I think you explained everything change, which is very, very big, right, from a change perspective. Do you see the differentiation from a small enterprise as a customer and a mid-sized enterprise as a customer in terms of some of the concepts you spoke around turnaround times, the mode of engagement, the expectation from operations, expectation from payments, or is it one size fits all when it comes to payments, trade, and operations?
Ultimately, the way you serve your customers is the same. The types of tools that they may require may differ. An SME may only need an app and something less sophisticated, but they still want to know how much cash they've got. They still want to know where their payments are. It's just how you scale that up for a corporate, and they'll want things much more integrated. But really, there's not a huge difference. It's just the scale of it.
So it's great, similar expectations from maybe different personas. In a small business, maybe the founder is seeking everything, whereas in bigger business, maybe it's multiple personas you need to manage. Very interesting. But moving to you, you've been designing value propositions across product lines, across segments. As you see more digitization coming on the platforms, what technology can do and can offer, when you look at it from a product and a value proposition perspective for the bank as a whole, how do you see this changing for a large corporate or for SMEs?
Hi Chetan, thank you. Thanks for having me here again. Assalamu alaikum everyone. Okay, so often when I enter discussions, especially on SMEs, etc., there's a lot of focus on the financing side of things because of the known, finance gap, etc. But as was highlighted in the earlier panel, people on a day-to-day basis, they interact on transaction banking. They will, on occasion, have to approach a bank to get approval on credit limits or to get approval on one-off term loans or project financing, etc. But by far, in terms of volume and the number of touch points they have with your bank, it's going to be through your transaction banking services. Which is why you need to make sure that whatever you have is robust, reliable, up, etc. At Khaleeji Bank, we only launched our corporate digital banking about a year and a half ago. So while the bank has, about 10% market share of local corporate finance market, we've not heavily penetrated on the transaction banking side of things. Since the launch, obviously, we've seen rapid uptake because that's a basic prerequisite for modern corporate banking. When it comes to the development of the value propositions, the first thing you need to do is make sure you're offering all the basics, right? So everyone who's going to want to join you will need his basic information services and then his basic transaction services across your local payments and your international payments. Then what you try and do is see where you can look at value-added services by looking both at where things are trending in terms of the market as well as where trends are moving with technology. So everyone's noted the pain point faced by corporates and SMEs when it comes to international payments, for example. both in terms of cost as well as in terms of the lead time in executing the transaction. In terms of cost, if you look at the local market, I was surprised how many SMEs we found who were using local exchange houses or remittance providers to do their corporate settlements, despite the fact that this all had to go through a completely manual process. So, they have to get the invoice, write out the check to B.S.C, take it to the boss to sign it, take it over to B.S.C branch, get it delivered, but they would still do it because the bits they're saving on the FX is worth it to them. And when you're a small business, your margins are thin enough, or let's not say your margins, your absolute profit per month is thin enough that the savings you're making is worth it. That's one extra salary you can have, right? So when I look at a problem statement like that and how I can solve it for clients, I would not go jumping straight to some blockchain-based solution. I want to see something I can implement quickly and effectively, right? So typically when we're trying to ideate these types of solutions, we'll look either just across different segments within the banking industry and how it's being solved for, or we can look across industries to see how the problems are being solved for, right? Very often what I find, at least the way I work, is that I can go and look at what's happening within my corporate business or within my treasury business and come up with solutions for my retail clients or my affluent clients, right? Or likewise, I can go and take a look at what's happening in retail and say, can I go apply that over in my corporate banking business, right? And I'll sit kind of across the three business lines, saying, how can I leverage a solution we have, tweak it, and then move it across? So I mean, the things like the remittance as a service solutions have been out for a while. They've been implemented by banks such as BBK. We've seen it with STC, with Beyond, etc. And that allows you to get real-time or near real-time, at least on local currency payments, by leveraging on connectivity across domestic payment networks, right? So I think that's a direction we're going, and I'm reasonably sure other banks will not be far behind, right? The other thing you see is as more and more activities go digital, and payments go digital, even for corporates, the requirements around cards have been increasing, right? So again, the first step is to come out with some basic solutions. So we're, for example, launching our corporate prepaid cards because people who just want a payment solution don't want to have to go through a credit approval process. But you have readily available white-labeled solutions from Visa, from MasterCard, etc., especially for larger corporates who have different needs, who have requirements to be able to issue virtual cards for expenses, for travel, for one-off payments, whatever the case may be. And I think, these niche areas is where we've seen some fintechs really take off. If you look at Ramp, for example, in the US, and we've not so much seen, corporate banks build the type of solutioning into to leveraging on that technology and that payment solution to actually see how you can solve a lot of the challenges they're facing in the finance department, which FinTech like that has done. And I think there's quite a bit of opportunity there to either go and implement, the 80-20, like the few things that have the biggest impact for those finance departments, or to just go partner with a FinTech like that to go and start solving some of those solutions. I think the other area we're going to see is that as the ecosystem gets set up, in terms of kind of corporate digital KYC, which is something still not there in the local market. In terms of open banking, something still not quite there in the local market. Then the ability to have this centralized view on transactions, at least for SMEs, will strengthen the bank's capabilities to do lending for those SMEs against these on a cash flow basis, if you like. which is important in the absence of things like audited financials, etc., which you face with SMEs. The other area I see for transaction banking where there is opportunity, especially, for example, when our CTO, Osama Nasser, came out with this solution, he focused on a proprietary low-code-based solution, which frustrated everyone because it took forever to build it. It felt like. The plus side, now it's built, with a little bit of tweaking on the org structure to get that development going more agile, more fast, etc. Through a kind of blended, in-house, out-house approach, is that you can start tailoring those solutions to specific segments, right? And I think that's also an area where you have greater opportunity with SMEs. When you go for the large corporates, they're going to have sophisticated ERP systems which are dedicated to their particular sector and business line. And your ability to do value-added services is, build it out. It's not going to match that software and that ERP's ability, right? Your best option there is to try and go and integrate with that ERP system to offer a more holistic solution and try and take the client like that. But when it comes to smaller businesses who would probably not invest in that kind of ERP, again, by just taking those kind of 3, 4, 5, 6 most important functions that ERP is providing for them, and then building it on your corporate banking layer as a segment-specific proposition, building on whatever existing collections capabilities you have, or the fact that you're the owner of the accounts and you're getting the cash, and offering these as value-added, whether it's invoicing, whether it's receipts, confirmations, reminders, notifications, etc., for their clients, and so on. I see that there is opportunity to build out these things to create value-added for SMEs who would probably not invest in those ERP systems, and try and carve out some kind of a niche for yourself in these specific segments.
So you highlighted, looking again from Khaleeji's perspective, you had a benefit of bigger peers introducing their platforms before you, and you innovated our platform in the last couple of years when technology has been available much more in a sophisticated way. So again, a typical question comes on value proposition. Do you offer best of everything, or do you offer 1 or 2 areas and you go deep with FinTechs, all the innovations? Is there a view you have on what the bank has done and what is likely to be the strategy?
Look, one of the challenges anyone who's based in the Bahrain markets is going to find is that the market is not deep, right? So by definition, you'll find that almost every business model in this country, even if you look at the successful business families, you don't find, like in the States, this family became famous on timber, right? And they became hugely rich just doing this. You find in shallow markets, you have to go wide. So you will have a tendency of finding, this family business, they went into, car trading, then construction, then trading, then this, because it's not a deep market. And likewise, when you're going to create solutions, one of the challenges you're going to face with the digital solutions, if there's a large capital investment, it's not deep enough for you to get a return on that investment. If you want to, for example, say I want to go integrate with an ERP, right? Does a particular ERP have enough local subscribers that when you take your percentage of that, it's going to justify it? So I would say in a market like this, you want to come out with a base that can serve everyone as much as possible, and then you want to try and, or you're going to have to, because it's still a very competitive market, you're going to have to create a competitive advantage by going into a limited number of segments, segment by segment. Obviously, the way I would prioritize, I'm sure the way anyone is prioritizing, is by saying, look, I estimate the total addressable market of this thing is, X billion, whereas this one is maybe 1 billion and this one's in the hundreds of millions. Let's first focus on this one. Let's see what are their key problems here. Well, they've already got property solutions, but it's quite fragmented. I'm not going to go try and integrate with any of those. We'll try and take this bottom segment of the market, we're going to build out these 5-6 features, and we're going to roll them out over whatever, a period of 6 months, 9 months. And that's going to be our focus for this year, right? And then maybe take a look at another segment or, play it in an agile manner based on reaction. I would say this is probably the appropriate approach, or this is at least the way I'm thinking about it.
Very, very interesting approach on approaching the market and penetrating it. Shahzad, I'll go to you now. You heard expectations from Paul, which is quite similar across segments, but lot to do. And you heard Maytham's value proposition story. Now it all comes to what technology can deliver. And you having a significant amount of experience in delivering the transformation technologies. And normally in industry, transformation projects either fail or they stall. So in your experience, what is the single largest challenge which you've seen while implementing the digital transformations and initiatives?
Thank you very much, and thank you for having me here. Very, very important question. It is interesting. We heard a lot of success stories. Lamei being one big success stories. But at the same time, there are so many stories of being publicized. Banks are publicizing going into digitalization, transformation, new projects, and just coming out, but they fail. And it's quite a large number. I mean, even in Bahrain, we've seen there are good success stories. Ila Bank is right here, and we've seen that. But there are others who have come up with a number of events, publicizing their digitalized, but have not. And there are quite a lot of reasons. And we are here today talking about NextGen banking and transaction digitalization. But if you think back, this whole process of NextGen and future of banking is not very old. I mean, it has, if you go back, and you mentioned my experience, my first bank that I was launching and into the system, at that time, there was no such thing. It was a very simple thing. The first transaction that we were doing, there was no concept of online payments. Bank ABC was one of the banks that we were working in as a startup and and this is in 2000. So if you look at it, it's not a long time frame. And my boss brings to me, and at that time, it was testies. So you can see. And at that time, even that concept was, boss brings to me a closed envelope and a test key card. And I'm looking at him and I'm saying, you're actually giving me the access to the full operation. I could literally transfer the full amount. So you can see this is 2000. Even if you go back to 10 years, it's not that online banking and all this benefit pays and all this was there. It's new. Now, when you look at system implementation, it's not some banks are implementing their system for 1 year, 2 years. It's a 5 to 10-year project. And if you look back, a lot of these banks which were there established, they have spent a lot of money and to invest in the systems. And 10 years back, even 10, maybe 15 years back, you didn't have those concepts that we are talking about this. I don't think you were looking at a conference like this or seminar like this. So, a lot of banks have legacy systems. They've invested a lot of money. Now it's easy to say, yes, we want to change. But you cannot just change, the plumbing. You put in new taps on old plumbing and everything will be flowing okay. It's still rusty pipes underneath. So you need to invest quite a lot. So it is quite a big investment. And if you don't go and really think about it and see what you have to invest in, and you change, Emirates Bank invested $300 billion to really change the system. And similarly, those banks which have been successful, one of the key things that they've done, they've actually understood what needs to be changed and how it needs to be changed, not just change some part here, some put in the API here, or bring it. It's a lot of transformation. Lot has changed. The pace of transformation is just phenomenal. I mean, even if you look just a few years back, ChatGPT, for example, AI was not even that much in everybody's mind. It was in 2023. 3.5 came in, and now people will laugh if you say you're using 3.5. The pace of change has been so phenomenal, and it is just the beginning. So for us to see even ahead, I think it's still, you have to be very careful. Banks have to invest, how they have to invest. We were speaking about the agentics and how things can be done. You could literally go on your phone, as mentioned earlier by one of the panels, and they can do the shopping for you. You can, want to book a flight, it's long task, you can just tell it to do things for you as an agentic mode. So that's where we have come from. So a lot of things happening because there's no clarity. The culture has to change. I mean, one of the key things that have to be there for any bank has to be the culture. People are scared. A lot of times when you talk about AI and digital transformation, you need to really teach or train people that it's not a matter of losing jobs. It's a matter of innovation, making growth, and the same teams can be grown. So that fear has to be taken out. It has to be clear what you want to do. You can add in everything you want to do, everything you want to add in the customer experience, you need to add in digital trade finance or whatever. It has to be very clear before you're investing, what you're investing in. One other thing that is very, very important is these are the days, as we have seen, the digitalization and ease of online banking and everything being on cloud and so on. It's also brought in a lot of security risk. And a lot of institutions are not bringing in the cybersecurity or the compliance teams together. Bahrain is very fortunate. It's got a very good central bank regulatory regime, which requires you to do a lot of things. So it forces that there are still weaknesses. And those bringing in the compliance teams and the cybersecurity teams too late is always going to be an issue. And you can end up finding that there are so many weaknesses that you cannot change, and you have to stop. Obviously, having the right resources is very important. You can have and culture in terms of building, encouraging people to develop something new. With AI and things, there are so many things that can be done, even by, I have no IT experience. If I say I can do coding, I can't. With the AI, actually my wife was launching a platform for online tutoring. I said, okay, and ChatGPT just came out. I was able to actually built in a chatbot which was for tutoring. This is something that as a person with no background, no knowledge can do. So you can see that the team that you have in the bank is capable. They're younger generation. They know things much more, and these ideas should not be discouraged. Even someone bringing in any simple idea can be quite useful. So I think these all factors combine together to bring in the change, and that is very important to work together. And I think, as I mentioned, collaboration within the team and outside. Use help where required. We are building bank and we're using wherever possible, because you need to be ready to what will the system be able to do for the next 5-10 years, not in 5-6 months or 1 year. So you need to be able to investing quite a lot of money. We need to be able to see. But yes, the question is, where is this technology going to go? Can you be fully prepared? You cannot, but you have to keep on trying and making and keeping an eye out for it.
So it's not one challenge, it's quite a few challenges on transformation. And each one needs to be tackled. You named at least 5 of them, if you could note: culture, team, understanding the technology and where you are, how away you are, appreciating that what you can do and what you need help, seeking help, clear executive buying and budgets, and then estimating it right as well. Thank you so much, Shahzad. I think it's clear that any of these can make into a stall or a failed project. Said, moving to you, most of the time people say get the foundation right. And corporate or transaction banking change started a little later compared to mobile banking, internet banking, which were B2C initiatives. But when it comes to foundation technology and the APIs, cloud, automation, all of this coming your way, how do you see it's changing the transaction banking foundation?
Thank you. It's a very good question. First of all, Assalamu alaikum. Thank you for having me here today. And yes, you have to make the foundation first robust and ready for what you want to build up on what you have. And as you mentioned, if I have the ecosystem of a bank or a FinTech or any technology-driven organization, I will think first of the how to make it more modern, how to use the latest technologies to help this organization. And when I say the latest technologies, it shouldn't be the best, but it should be the most fit to the organization's size and capabilities. And you highlighted the APIs, and as we can see, the APIs is the blood vessels, is the roads of the country. If you can imagine the systems as cities and towns, the roads between these cities and the countries is the APIs. And APIs is not only for serving the integration within the same organization, it also serves for the integration and enablement for outside the organization. Part of it with the regulators, part of it with the national hubs like Benefit, and the important part of it is the customers themselves. And having your APIs ready to be consumed by the customers is very basic now, and it's really required. And once you have your customers with their systems integrated with your systems through APIs and through integration, this will make the retention very solid and very robust with the organization. And the retention, which we discussed in the last panel. Here, the retention on the corporate level and SME level is more important and more critical to make sure that the organization and the capitals and investments of these SMEs, especially SMEs and corporates, will retain with the organization. Cloud is now booming, and it's really basic. It helps you to achieve the scalability. It helps you to achieve the flexibility to provide your business solutions, to provide new ideas, to invent and to innovate. And I'm proud to be in an organization where our footprint on the cloud is much bigger than our footprint on-prem. We are more cloud now. And this is really a strength and the enablement, and makes you, when you pave your way, you know that you have a background where you can where you can be stable. In addition to that, you mentioned also about the automation. Automation is critical to make sure that the manual operations, which can be a reason for errors, is minimized. And also automation will achieve that whenever you come with a product, you come quick, and you can do your business and your day-to-day operations in an automated way. As I like what Paul said, you will find the operations shrinking and the technology getting bigger. and this is reality. You will need more hands, and it can be the same hands, and this is also what our colleagues here say, that now currently the development is easier and faster, and the technology with the help of AI became more robust that even non-technical or non-deeply technical people can start working and can generate output and generate value-driven. If we put all these together with the modernization, with the APIs, with the being cloud and being more on the cloud, if it fits the organization, of course, and with the automation, and if we add to them the security, cyber security, which is really critical and backbone, and without it, nothing can be achieved. If we put that all together, we will have a game where the customer is the winner. And this is all our objective from all these aspects. We are all here because there is a customer, and we want him to make value out of all what we are doing.
Excellent. So it's quite a few levers available for foundation, and then in the center, what customer is looking for, delivering that. Ahmed, you've been hearing bankers, you've been hearing technocrats and CIOs talking about what their challenges are. Now, you at ITS have been solving some of these challenges with a modern Islamic core banking and innovating on multiple digital FinTech partners. So if you can give your perspective, Ahmed, as a FinTech, how do you see supporting your customers' expectation on corporate and core banking?
Thank you for the questions. I'm happy to be part of this session today, and I'm happy to hear about the different aspects about the business needs and the technology. First, from my experience, the core is the heart of the bank. So everything we do, lending, payments, corporate service, all depends on how strong the core is and how it's flexible. So referring to Shahzad, okay, he said that it's not easy to change the core. It will be this is investment maybe for 5 years, so it will be difficult in product to change legacy system. I totally agree with him, and that's why the being ready, future ready, is not about replacing everything. It's about modernizing the core banking, the core, to be more open and connected and more fast. I can see 3 main rules for the modern core in transaction banking. The first one, agility. With open APIs, as mentioned by Mr. Said, and modern architectures like modular queries, microservices, cloud native, all of this will make the bank launch new product, new service in faster, and gives the customers what they really needs. And let me share with you one example for one success project that we already have. The bank wanted to transform the lending, digital lending, using AI for SME customers. They had 2 goals. First one, for existing customers, so they can build new model, AI model to analyzing the existing customer data by checking the eligibility of the customers based on the account information and transactions and cash flow, and check how much limit should they receive to this customer so they can approach the customer instead of waiting to the customer to come. So they can create more opportunity for the customers. Second goal was for the new customer by building new AI models and OCRs, using OCRs to read the documents, to automate the reading the documents, which is coming from the digital channels, and validate the information that we already have, and fraud detections, and also to analyze the data, the financial data, in order to check the eligibility of these customers and giving the correct limit for this customer. Of course, it will be integrated with different channels like credit scoring, money laundering, KYC. All this will be integrated in order to analyze the customer and check the eligibility. And what was the results? The results, the process that used to be done within days, it took only a few minutes. I think this is how the technology should be used, invisible, but making change for the customer life.
Thank you so much, Ahmed. So my next question is open to all of you. And you see the businesses wants to change. It's new. It's high in budget. Right, one has to do this with FinTechs, and it's so much ecosystem play in Bahrain. With Bahrain FinTech Bay hosting almost 120 plus FinTechs. How does bank partner with FinTechs in areas of corporate? Because everybody's after retail, right? So how do you look at the FinTechs, and you can go in any order based on what your personal experience is. How can bank partner with the FinTech ecosystem to regulate the transaction?
Well, I think I'm going to talk about frustration I've got. Okay, so Ashish talked about it, and this may be more of an untapped opportunity than anything else, is that where fintechs can help and actually regulators need to help on this is, I see trade finance as being an area that actually I still cannot believe that we've got, I call it all the Lego. We've got all the Lego of electronic bills of lading, of electronic documents, and we're still in a position where documents, and when I talk about documents, I don't talk about a couple of documents, I'm talking about 100 pages of documents are being transported around by couriers, around the world, and nobody will move, nobody will pay until they've seen those documents, check them. And we've seen things like Marco Polo, we've seen other fintechs have a go at trying to create some ecosystem orchestration for trade finance. But really, that's what I would like to see happen. But it's not just going to happen with fintechs. It needs regulators, it needs sponsorship at almost a government level, and push that forward. And therefore we may see a big transformation. And this transformation, MENA is at the heart of it. MENA and the Far East in particular, where we've got goods coming over from the Far East into MENA, there's a huge opportunity there. I'll be quiet about my frustrations.
Interesting. So that's a challenge yet to be solved. And Shahzad?
I think I fully agree with what Paul is saying. I think fintechs are doing a great job, and I think the regulator, B.S.C, has been actually quite good and has been in the forefront in getting these fintechs and having the sandbox and getting them approved. I think fintechs need to be, right now they're working on a lot of things, a lot of areas. Some of them are not even fully understood within the industry itself. Open banking is a key buzzword right now, and I think that needs to be understood and fully incorporated. And I think that's where, again, banks and fintechs need to start working together. And fintechs also have the advantage, they do attract a more talent pool, which banks, being more conservative, have lacked. So I think that working together rather than restarting the cycle and reinventing the wheel and working in silos.
Any other views? Otherwise, I'll go to my last and a very important question. We are where we are, and when you visualize next future of the transaction banking, what do you see, and I'll start with Saeed first, what do you see the greatest untapped opportunity where we haven't yet neither thought nor detailed out or not identified a solution which our customer is still looking for? Paul already highlighted trade as one area, but I think I'll start Saeed with you and then continue with others.
Yeah, so if I think of one thing, it will be the innovative operating model. If we think that it's not the technology, yes, we need it, but technology is a tool. If we think about the partnership, yes, it's very important, and it's the collaboration with the FinTechs or with third parties. But again, this will increase the reachability. But if we want to combine all of them together, we will think about the innovative business model or innovative operating model, because this is the culture. This is how the whole process will be thinking of how to make a value-driven experience for the users. So as our colleague said in the previous panel, that it's an invisible service, but without it, there is no, there will be something missing. So it's really important to think in a way that the model itself is what you need to improve and what you need to make it model, not the tools, not the reachability.
So innovative operating model. Shahzad, yours?
I think what is important, and a lot of people who are experts understand, I may not, what am I spending on, what interest I'm paying, am I paying too much or not? I think the models need to be able to address the needs of a common person who's not finance savvy or understands that. I think those, and open banking, I think is a way forward as well, which will bring in a lot of that information. How that is then presented, I think it will be a key value addition to the customer.
So personalization is the big thing as per you. Maytham?
Well, I think if you're talking about, something futuristic that we've not yet seen, especially in the SME space, I can see the beginnings of quite a few things potentially. I mean, you had the idea of kind of fractional CFOs introduced to try and resolve some of the expertise issues, but with what we've seen with generative AI and LLMs, the idea of having specialized trained agents that can be integrated into joint ERP banking systems, monitoring your cash flows, running your reconciliations, projecting your liquidity requirements. You go to raise an invoice and it says, that guy's always late paying and you're already going to be short on cash in 3 weeks based on contractuals, or based even better on behaviorals, right? I mean, this is something we do in sophisticated organizations. As banks, obviously, liquidity management is very important. We do our behavioral projections, we do our contractual projections, etc. But it's not a far leap to see, based on what you already have available, that you could have tools which would do that for SMEs. And then just integrating the ERPs with the banking systems to offer that on a whole, I think that would be a major value added. The other area that I see potential in is around tokenization. We're far from there, but I was on a panel a few weeks ago and I was discussing this, how one of the ways that we try and realize value from something is by having it become a form of recognized transferable property, right? And the establishment of these movable asset registries was an attempt to do that. You can see tokenization as a natural evolution of that. And if you can have your receivables, contracts, and all of these types of cash flows tokenized, then the capability of being able to do financing on the back of them, etc., becomes vastly enhanced. So I'd say those are kind of two.
So one-stop shop for an SME kind of a solution, as well as tokenization and taking payments to the next level. Paul?
I think my colleagues here have covered most of the things I would come up with. I think I'll just go back to the ecosystem though and open banking. The more we can integrate, there's so much opportunity out there, and the more that we can collaborate, banks and other institutions, I think that will really open things up.
Interesting. So ecosystem and collaboration, which came from you in the panel one. Ahmed?
For me, the biggest opportunity is about adoption. Because today, banks don't work alone anymore. We all part of one big ecosystem. Okay, and FinTech brings new ideas, speed, banking bring trust and experience, and when both work together, they are going to drive the futures and launch new products and services more faster. So I see the future is working together.
Yeah, so it's collaboration again, which came from the panel one as well as the. I think we're out of time. I'll open it up for audience to go for a couple of questions. Maman, if you can give the mic. Any question? I think there's a question from. If you just introduce yourself. I know you were on the panel one.
Yeah, no, it's a great talking point. SME financing, de-risking, lending, and increasing liquidity is a key topic from the CBB down. But I think just on the point of collaboration, we're scoping an initiative now. I know we've tried to do it for the last 9 years as a country, but I think we have the right ingredients in place now to actually take this forward. We're starting with a trade finance registry for the kingdom, and then utilising the infrastructure of benefits. And we're starting this pilot. We've started the pilot, and if anyone wants to get involved, I think do let us know. I think it's a starting point to see what we can do and take all the data points back 6 months, 1 year. And then the reason why I say the trade finance registry is that's the starting point, just to get banks to understand the benefit of sharing all those data points and what can be done with the technology behind it, and it'll help everyone. So we had a few working groups already, but yeah, do let us know if anyone wants to get involved and see kind of the outcomes of that. But it'll bang on to what you guys were saying.
Great to hear Bahrain FinTech Day has already started piloting some of the ideas panel is discussing. Any other questions from anyone else? Excellent. So we'll draw end to the panel. Thank you so much to my fellow panelists for a fantastic discussion.